last speaker is Michael Hudson.
I think the name for this talk is a misnomer to consider the vampire squid as a parasite. It's not a parasite. It's another animal. When parasitism in nature is usually part of a symbiosis. It's usually a small organism that invades the host. When a vampire squid attacks a prey, you know that there's no symbiosis there. It's coming from the outside, and you know what it does. It kills the prey. That's what dumb capitalists do. That's what Goldman Sachs does. It kills the prey. But that's not really how parasites work in nature. The parasites, first of all, need to keep the host alive, because if the host dies, then it can't provide any blood. What is it that the parasite really wants? It wants the host's surplus value. It wants the bloodstream. It wants the nourishment that the host takes in and feeds the parasite. The problem is, if you're a parasite, how do you get the host to feed you? Most hosts would not willingly take on a parasite. So every kind of a parasite in nature, from the Lyme disease mites to insects to amoebas, they all are very complex organisms within themselves. They have an enzyme that they infuse into the host that works right on the host's brain. And the first thing they do is they have a kind of Novocaine when they bite you, so that you don't feel the bite. It's as if it's not there. You don't sense it, and the parasite's there. And the first thing the parasite does is, once it gets to your brain, it tries to convince you that it's part of the host's own body. Not only part of the host, but the body favors the parasite. The body comes to think of the parasite as its child, to be protected. And the purpose of the host from the time the parasite comes in is to protect, the host wants to protect the parasite and help it nurture so it can get to the point where ultimately the host does die, because we all die in the end. But what's going to happen when we die? When the vampire squid kills its prey, it has to go on and find somebody new. But when the parasite dies, how does it go and find somebody new? Because it's only a little kid. It's only like a little insect or a little like amoeba. It has to convince the host to get devoured by some other animal so that the parasite gets in the other animal's organism and then passes through that. Usually it's a triangular life cycle. It's a very complex life cycle. So what we're dealing with is a kind of symbiosis in a large and a complex system. It's not simply attacking, looting, and emptying out, as Michael has described quite correctly, hedge funds doing, and as Goldman Sachs has described doing. So the intelligent parasite treats the host as almost helpful, and many parasites actually help the host find food. They want to do everything they can to sort of steer the host, sort of like the animals the sucker fish that ride on sharks, and sort of steer them along. Well, the success of financial parasitism in our economy is to convince the economy that banking and finance are actually part of the host economy itself. And when the Wall Street Journal refers to Wall Street and the super rich, the 1% as being job creators, the idea is to make the host economy think these are not job destroyers. They're not here to impose austerity, to make us look like Greece and Ireland and Iceland and empty us out. They're here to create our jobs. That's why Michael Milken was so widely applauded. And when Michael mentioned earlier that 40% of U.S. profits are in the fire sector, it's as if somehow we're all part of GDP, and somehow the finance, insurance, and real estate are all services and their services, they provide a service. If you provide a service, that's not taking from you, that's providing a service. Well, that's a parasite's view of the world. Of course, he's providing a service for the host. He's keeping the host alive so that ultimately he can, the host's job is to feed the parasite so its children can hatch, devour the host, and then move on and be devoured by yet larger hosts, which I guess is the equivalent of multinational investment, coming from the dying economy into economies abroad that are lesser parasitized, such as Russia and the Ukraine. The key point, I think, that since we're here at the LET Forum to discuss is how is it that the host has become so disabled that it doesn't realize that it's been parasitized, that it thinks of finance as its child, to be nurtured as the leading sectors, and to the point that the allocator of resources in our economy is Wall Street, not the government, or not any entity that actually seeks to create profits in the classical sense of the term, which is the sense that Marx used. Profits to Marx were made by employing labor to produce goods and services to sell at a markup, surplus value. But that's not really what finance does to make money. It makes money off money, M to M prime, without the MC M prime intervening. And that's how almost all of the gains in the 1% have been made since 1980. It hasn't been largely by profits. In fact, it's been the more a financialized industrial company has to pay the financial sector, the less profit it has, because finance is a cost of business and interest is crowding out profits. Just like interest payments, mortgage interest, student loans, credit card debt is crowding out disposable personal income in shrinking markets. So what the U.S. economy and the European economies are experiencing today is a shrinking of the economic surplus because it's all being absorbed by the financial sector that is not flowing it into the economy, like Say's law says, that production creates its own demand. Employers will pay their workers so that they have enough money to buy what the employers produce. But if the workers have to pay high mortgage payments for houses that are inflated on credit, if they have to set aside money in their pension funds to be turned over to Drexel Burnham to invest in crooked S&L loans, if they have to pay for their education, they're not going to be able to buy the goods and services they produce. So the circular flow of income within the economy is drained by the financial sector. Now, the whole idea of national income accounting originally was based on circular flow from William Petty, but most of all, Quenet, the physiocrat in France. Petty and Quenet were surgeons. They were doctors, and they used the idea of circular flow within the body to depict the economy as a human body with a bloodstream flowing. And when J.B. Say said, well, okay, this is the circulation of blood is like the circulation between producers and consumers in the economy, employers and their workers, he didn't take into account what the British classical economists were talking about, and that is the rentier rake-off. In 200 years ago, the main rentiers were landlords extracting rent. But today, on top of the landlord's back, you have finance. And most of the big real estate investors buy their properties on mortgage. They try to debt leverage. The idea of almost all real estate speculators is rent is for paying interest. And if you're a consumer, you're making an income to pay interest. You have to make enough income so that you can afford to pay off the student debt you've taken out, so you can afford to buy the house that you need to live, and so you can afford to pay the interest on the debt you've taken off. Now, 100 years ago, almost all the socialist parties of the world had the idea that money and credit should become part of the socialized capitalist economy as a public function. And the idea, and certainly what Marx expected, was that for industrial capitalism to transform the characteristic of finance so it would no longer be parasitic. Marx used the term parasite in relation to finance when he said that the financial parasite makes the economy save, but it makes it save to pay the financial sector. That literally has been what's happened in the American national income accounts since 2008. The amount of banks have stopped lending. The amount of debt has gone on. In 2008, the saving rate for the U.S. economy was 0. And that's because there was plenty of saving by the 1%, but the saving by the 1% was all lent out to the 99% to become its debt. And so the 99% basically was working to pay the 1% who said, well, don't worry about debt, we owe it to ourselves. The ourselves were them, and the we were the 99% paying it to ourselves. And all of this is sort of buried under the fact of thinking of the financial sector as part of the body. Now, normally, a healthy body would develop antibodies to the parasite. It would be aware that the parasite's there, and it would design policies to deal with the parasites. And this is what the social democratic parties of Europe did 100 years ago. That's what the labor parties did. Now let's fast forward to last Sunday and the elections in Europe. All the papers said, look at what's happened. Look at all the big change. There's been an immense rise in the nationalistic parties, the right-wing parties, except for Syriza in Greece. And that was almost the entire headline. But actually, that wasn't the main lesson of the election last week in Europe. First of all, the big change was a sharp drop in turnout voting. Most of the population was not going to vote for the right-wing parties, and they certainly weren't going to vote for the ultra-right-wing, which are the socialist parties and the labor parties. How is it that the socialist parties of a year ago are now the leading advocates of austerity in Europe? The Socialist Party, Papandreou in Greece, the head of the Socialist International, imposed the austerity taxes in the program from Europe and fell from over 50% of the Greek vote in his time to 8% last Sunday. The entire world now realizes we have a parasite, and that parasite is a socialist party. And of course, it's not the kind of socialism you and I mean. It's the socialism of the vampire squid, the large financial banks. From Tony Blair's move to New Labour Party, serving the city of London, which is the banking sector, to Clinton, serving Wall Street, you have the Democratic Party, all of the parties that used to be on the left, who somehow, in their attempt to criticize industrial employers, they don't realize that the industrial employers, as well as the working class and labor, are both being parasitized by the financial sector. They somehow act as if the financial sector is sort of independent, or else it's part of the industrial sector. And I do not have any documentation on what I was told in the 1960s, both by Seymour Mellman and by Terence McCarthy, that most of the travel fees and housing for the meetings at the Socialist International were all paid for by the CIA. It's not necessary to have the actual documentation. All you have to realize is that there's an immense amount of money coming out of the U.S. government and also by Wall Street and the Ford Foundation and the large foundations to support to somehow turn the socialist parties and the left away from what it was 100 years ago, from having an economic program to criticize the rentiers, to tax economic rent, to tax real estate, to put banking into the public domain, all of a sudden to make the focus non-economic topics, such as you see in the books downstairs. A lot of these are culture cultural, sexual. The one thing you're not going to find is a discussion of finance. So finance has successfully parasitized most of the left-wing political parties as it's parasitized the industrial economy itself. You can see what's happened similarly in the Ukraine. What is a country such as the Ukraine supposed to do when at the last New York Review of Books, George Soros wrote his idea for the Ukraine. The kleptocrats should sell out to us Western investors as partners, and we'll help rationalize what they do to the Ukraine. By the way, there's a very good book on the Ukraine that was just published by press on, I have to put in a plug for that, a whole group of articles, Flashpoint in Ukraine. The idea is that Soros and the West wants to essentially convince the kleptocrats that the West will support what it takes as long as they can then take their companies, issue them on the stock exchange. And remember, Russia, after the Russian neoliberals took over after 1991, Russia was the leading stock market in the whole world. The post-Soviet markets were the leading markets because they were not yet parasitized. So you can look at this whole process as Drexel Burnhamizing the post-Soviet economies. It's bewildering to me why most of the discussions, even of Marx on the left, are all Volume 1 Marxists. If you read Volume 3, that's all about what I've talked about. In Volume 3, Marx talks all about the exponential growth of debt, the tendency of debt to grow faster than the economy. That's why how Marx attributed financial crisis to. And I think that really should be the takeoff point for realizing that you need to recast the national income accounts. So instead of showing the fire sector as part of the economy, you look at it as overhead. It's not part of the economy. It's the parasite. It's the extractive part of the economy. Its income is not productive investment. It's extractive investment. And this contradiction between productive and extractive investment was the core of all classical economics. That was the aim of Marx in writing his theories of surplus value. It's all to collect what every economist had written about the distinction between productive and unproductive labor, unproductive and productive investment, right down the line. And the move against Marxism was basically a move against the whole thrust of the preceding 100 years, 200 years of classical economics that did this to somehow in the 1890s depict all of the economy as being a single homogeneous organism, as if there was no parasite. And that's what neoliberalism is. And that's what your economics is taught today in the schools, that it's all part of a single organism. There's no such thing as unproductive income. All income is earned, and everybody earns in proportion to what they produce. This is what J.B. They give a prize for him every year. The American Clark, J.B. Clark said. And it's significant that the American Economic Association's prize that liberals like Krugman won are called the J.B. Clark Memorial Prize because it's the prize for denying there is any such thing as parasitism. And if the left can elaborate that point, it will be able to get the votes that are now going to the right in Europe.
Okay, we have
Tax question. That's very important because it affects what are the reported profits. When Marx talked about profits, and anybody in the classical period talked about profits, what they really meant is cash flow, or what Wall Street accountants call EBITDA, earnings before interest, taxes, amortization, and depreciation. And that's because at the time they wrote, there wasn't an income tax, and you didn't have tax accountants expensing everything so that you don't have profit. You may remember what Leona Helmsley said, who was sort of the leading post-Marxist accounting economist. Rich people don't, or only the poor people pay taxes. Only the little people pay taxes. The objective of any accountant at Standard Oil doesn't pay taxes. The real estate industry, if you look in the national product accounts under for the real estate sector, the real estate, since World War II, you find not only does it not pay taxes, it actually gets a tax loss write-off for claiming that its buildings are losing money by over-depreciation, even while the buildings are soaring in price, according to the Federal Reserve's flow of funds statistics. So the depiction of the economy in terms of profits makes it appear as if the rich people are somehow not making profits at all. They make capital gains. And they make capital gains basically by asset price inflation. The result of not paying taxes is, of course, that they create the urban crisis, which is the second part of that question, and the privatization, such as Chicago selling off its sidewalks to Goldman Sachs, the right to put parking meters on it, so that all of a sudden the price of downtown Chicago parking has gone way up. Of course, there's a good solution to cities having to privatize their property and sell off these toll booth rights for rentiers to put up toll booths. It's called the real estate tax. I mean, that was what was, there was no reason at all for Chicago or for New York not to tax the increased value of the real estate that's being inflated by debt. And they've been able to talk about parasitism taking over the brain. The banks have been able to trick the public into believing that if they raise the taxes on real estate, people will have to pay more. The reality is, if you do not tax real estate, all this increased rental value from the public services that are provided, from the prosperity, and from the credit, all this rental value will be pledged to the banks for debt. So whatever the tax collector relinquishes ends up being paid to J.P. Morgan, Goldman Sachs, and the financial sector. So the solution, not only to avoid privatization, but to keeping down housing costs, to keeping down the financial overhead, is a tax system. The tax system and policy should be the way the anti-parasitic enzyme in the bloodstream to prevent what I've been talking about. The other question was whether this is a cycle. No, what we're going through now is not a cycle. It's the end, it's a phase change. It's the end of a process that has been occurring since the end of World War II. Every recovery since World War II has started from a higher and higher and higher debt level. So that now the debt level is so high that it's like trying to drive a car with the brake pressed right down against the floor. The brake is pressed so far down that there's no way of being able to expand the economy while you have to pay the overhang of mortgage debt, credit card debt, and student loans that is all blocking recovery. So what we are is in a debt deflation. And you could say that the debt deflation is the final cycle of asset price inflation, and that, by the way, is what my book, The Bubble and Beyond, is all about. But it's certainly not a cycle. The pretense is that it's all a cycle and we can get back to normal. What was normal was the ability of the parasite to take all of the growth of income for itself. And but now that there's no more income to take, you can't return to that normal because you're already taking everything you can. Time to kill the host and move on to a new one. I'll begin with the later question first. I remember how Bernard Lautauer told me that he went to school with Krugman. Obviously, Krugman's intelligent. Ron, you have to be very intelligent in order to be able to imagine an economy that works without any money or debt, having anything to do with it. You have to be almost a genius to imagine how this whole system can work without debt, without money. What Krugman meant when he said, leave money analysis to the technocrats. And we all know who the technocrats are. The technocrats are who were put in charge of Greece after Papandreou was kicked out, ruling on the technocrats are the former officers of Goldman Sachs who are now running Italy, Greece, and the other Eurozone countries that can't pay their debts. So essentially, the idea, when I had to go to school 50 years ago at NYU, everybody was talking about Milton Friedman and the monetary theory that MV equals PT, that somehow money is like, the money supply is like air in a balloon. And here's the economy with a pattern of how it works imprinted on it, the balloon, and you're inflating it or you're deflating it, and it keeps the same shape, but it goes up or it goes down. It's very interesting that Friedman, who had this ridiculous theory that you really have to be very clever to have such a successful deception, such a successful error, that a generation of students is taught this nonsense. Friedman knew it was a lie. He dedicated his book on monetary theory to Simon Newcomb, who was a great American astronomer who wrote a book on the Civil War financing of the greenbacks and debt. And Newcomb made it very clear that when he talked about the money supply going up, we all know what credit is given for. The credit and the money that is created is not to employ labor, it's not to buy goods and services, it's not to increase the price of commodities, it's to inflate asset prices. 80% of bank loans are mortgage loans. The effect is to increase the price of property and oblige new home buyers to go even deeper into debt to buy their homes. So, but if you're not allowed, if you have to now talk about an economy that only produces and consumes, there's no wealth. If you don't have, not only is there no money, you have to create a picture of an economy, a parallel universe in which there's no wealth, no money, no claims, and nobody owes anybody anything else. This is the image that Krugman does. That's why he's so applauded by the neoliberals. This man is the left. If he's the left, you need have no fear of any kind of a retort. So that's exactly what we're dealing with, that when people want to see the left view, they read Krugman. And Ron referred to the debate that Krugman had with Steve Keen. Usually Krugman just sort of denounces us all as a whole. He hardly ever mentions any of us from Kansas City, but because Steve is an Australian, he thought that maybe nobody would notice if he takes this poor Australian to criticize. Steve's PhD is in mathematics. A debate ensued where he absolutely was Bambi meets Goliath. If you all, any of you want to Google Steve Keen Krugman, you'll have a ball. We were all in Berlin a few years ago at an INET conference where Steve just the week after all of this to-do came out, and it was absolutely wonderful. I want to say something about what Julio said. He said that we all need education. That's essential. That healthcare is essential. But is it essential that we pay so much for education? Is it essential that education be privatized? Is it essential that healthcare be privatized? You can't justify the parasite by saying it's essential to let it make you pay more for what is essential. The parasite puts a toll booth in and says in order for the host economy to be fed, it has to go through us, and makes itself appear to be essential. There's no need for NYU to charge the highest student debt in the country. That was not the original idea of the land-grant colleges. These prices that people pay, the interest to the financial sector, the economic rent, all these are what the classical economists call economic rent. And not only is money and credit and debt excluded from the view of the economy, but economic rent, the concept of unearned income, is excluded.